Keep your family secure.
Welcome back. Well, for the markets, it's holding steady. The mid-caps are underperforming. We do have some source-based information on your screen, just to take note of it. Sources to CNBC-TV18 have indicated at this point in time that the IT department is conducting a survey action at the BBC offices in New Delhi and Mumbai, and this is with regards to alleged irregularities and income concealment. So this is what sources are indicating to CNBC-TV18. We'll get you more visuals, more details on this particular story, but as of now, this is what we are picking up. Back to the markets, just want to point out one particular stock which we haven't really addressed as of now. Newland Labs is reacting very well to its numbers. That stock is up around 10-odd%, so do watch out for that. Strong performance this quarter, and the stock is reacting well. But let's move on to commodities then. On the sidelines of the India Energy Week, which was held from Feb 6 to the 8th, Manisha Gupta, commodities editor, did interact with Ranjit Rath, who's the chairman and MD of Oil India, and spoke on a whole host of issues like volatility in crude prices, oil demand, and energy transition. She began by asking him about the opinion on windfall tax.
To me, windfall tax is something like revenue generation for government. And I'm sure government has a lot of fiscal balancing to be done. So considering the fact that the crude oil saw a jump, rather a massive jump in terms of pricing, so it's prerogative of government to levy and then convert that particular collection or contribution of oil and gas companies for social welfare.
How would you look at the year gone by, 2022, in sense of volatility in crude oil prices? How were your margins and profits because of that?
So in terms of profitability, Oil India remains profitable. We are part of the upstream segment of the hydrocarbon value chain. But one thing which I must tell you, that by virtue of being part of the hydrocarbon value chain in the upstream, say, we are aware of the fact that crude oil would always remain volatile. Now, the degree of volatility is what bothers us. Sometimes the degree of volatility helps us to have a strong revenue, and not very often we see a drop. But to me, what is more important is that this volatility creates an opportunity for us, not only to make money, but making money is not the key. It is actually gives us a leverage to plow back that particular revenue in the upstream part of it, where exploration is our focus. It's a very subsurface driven, hugely risky venture. So this gives us a leverage to plow back the revenue into the exploration part.
The conversation about IEW clearly has been one towards fossil fuels, because that's not dying down. Clearly everybody's been saying that the world oil demand has not peaked yet. But on the other side, there's such strong thrust on renewables, on green energy transition. How are you looking at both of these coexisting? How do you see investments being cut between two?
Transition is here to stay, and it is time that we have started thinking about transition. And as India per se, significant effort is already on to ensure that we create a renewable portfolio from a country point of view. Besides that, this current budget, which happened last week, has given tremendous amount of stress and thrust on the green part of it. So we could call it as a green budget. But from an Oil India point of view, we are a hydrocarbon company. So while we will protect our core of hydrocarbon exploration and production, we would also look at our alternative energy portfolio.
While we have seen this, and this is your word, you said the Indian fuel demand is unstoppable. Are you guys putting any number to that? What has been the growth since COVID? Are we back at pre-COVID levels? What is the kind of demand you're working with?
See, Indian energy basket is going to grow 2.5 times. That's one. The kind of refining capacity planning is on. That is why I say unstoppable. Third, India is actually offering a kind of destination called refining hub, because you have the oil fields on the western part of the country, and then the market on the eastern side, and with the coastline of India, you are actually on a vantage location. And while we say that refining is in the growth path, you must know that Oil India today is no more an E&P company. We have recently acquired Numaligarh refinery, and Numaligarh is going for a expansion from 3 million ton to 9 million ton. And we see strong return on that, for which we are actually running a cross-country pipeline of about 1600 kilometers from the eastern coast to Numaligarh. So we will actually have domestic crude and imported crude processed in Numaligarh and then cater to the mainland, and probably the look is
Okay.